Hello and welcome to Explain the Charts. Today is November 19th, 2025, and we are taking an in-depth look at Microsoft, symbol Microsoft. The stock is currently facing a storm of conflicting headlines, creating a classic tug-of-war between short-term fear and long-term optimism. On the bearish side, we've seen a notable analyst downgrade, broad-based profit-taking across the tech sector due to frothy AI valuations, and even Microsoft's own CEO, Satya Nadella, warning about potential roadblocks from power infrastructure constraints. Adding to the pressure, reports surfaced that the Gates Foundation significantly trimmed its Microsoft holdings in the third quarter. This negative sentiment culminated in yesterday's session, where the stock fell 2.7%, closing at $493.79. Conversely, the bullish case just got a massive boost with the announcement of a landmark deal where AI startup Anthropic will spend $30 billion on Microsoft's Azure cloud services. This has prompted firms like Morgan Stanley to reiterate a very bullish $650 price target. So, is this an AI bubble bursting or a golden buying opportunity? Let's jump into the charts to see what the price action is telling us. Looking at the daily chart for Microsoft, we can see the incredible run-up the stock has had this year. After bottoming out around the $345 level back in April, the price surged, fueled by the intense investor enthusiasm for everything related to artificial intelligence. The stock peaked at an all-time high of $555.45 on July 31st, a truly monumental climb. Following that peak, the stock entered a necessary correction phase through August and September. What's critically important is what happened next in late October. The price rallied back aggressively, but failed to make a new high, peaking just shy of the previous record at $553.72 on October 28th. This pattern is what traders call a double top, which is often a strong bearish reversal signal. It suggests that buying momentum was exhausted at that key resistance level. It's no coincidence that the recent wave of negative news about AI valuations and analyst downgrades hit the market right as the stock was showing technical weakness at this peak. Now let's switch to the hourly chart to see how this recent breakdown has unfolded over the last few trading sessions. We can see the stock was attempting to consolidate above the $505 level late last week and on Monday. However, the selling pressure intensified dramatically yesterday on November 18th. The price sliced through several minor support levels before confronting the huge psychological barrier at $500. The failure to hold this $500 level was a significant technical event, signaling a victory for the bears in the short term and opening the door for further downside. Zooming in even further to the 15-minute chart from yesterday, we can see the intraday battle. The market opened below $500, tried to rally back to reclaim it, but was rejected harshly around the 1500 hours Universal Time Coordinated mark. That rejection triggered an acceleration in selling. We saw a steep drop from there, with the price cascading all the way down to the session low of $486.78. This price action shows very strong bearish momentum and suggests that sellers are currently in firm control. Now, let's go back to the daily chart and discuss the bull case and the key levels to watch. Despite the ugly short-term picture, the long-term fundamental story, particularly with the new Anthropic deal, remains incredibly strong. This pullback could simply be shaking out weak hands before the next leg up. For bulls, the first and most critical task is to reclaim the $500 level. A strong move back above $500 on high volume would be the first sign that this sell-off is exhausted. If they can achieve that, the next significant resistance area to watch is between $510 and $515, which was a support level that failed recently. On the downside, the immediate support is yesterday's low at $486.78. This is now the key line in the sand for the market. A break below this level would confirm the bearish trend and could see the price head towards the next major support zone, which I see near the highs from this past June, right around the $480 mark. If that level fails to hold, the next significant area of congestion and potential support is much lower, down around $450 to $460. So, to recap, let's talk about the important levels and potential scenarios. Key resistance is at $500, then $515, and ultimately the all-time high of $555. Key support is at $486.78, followed by $480, and then the $450 to $460 zone. Here are some unbiased predictions. I believe there is a 65% probability that in the short term, the stock continues to face pressure and will retest or even break the $486.78 low. This view is reinforced by the bearish technical pattern, the break of the $500 level, and the current negative news cycle surrounding AI valuations. This scenario becomes more likely if the broader Nasdaq index also continues its pullback. Alternatively, there is a 35% probability of a bullish reversal from these levels. This scenario would be reinforced if dip buyers step in aggressively to defend the $486 level and price quickly reclaims $500. If the market sentiment shifts to focus on the long-term value of the Anthropic deal rather than short-term valuation jitters, this bullish outcome becomes more probable. Things to watch for will be trading volume on any up or down moves and further commentary from analysts on the state of the AI sector. High volume on a down move is bearish, while high volume on a move back above $500 would be very bullish. Always remember, this analysis is for informational purposes only and is not financial advice. You should always conduct your own research and make investment decisions based on your own risk tolerance and financial situation. Thanks for watching Explain the Charts.